Welcome. My name is Alan Reminick. I'm the founder of a company called Blue Apple Risk Management, and we have been providing a service for a variety of different industry groups. We have four basic industry groups: the agricultural industry, the chemical industry, including fertilizer, the financial industry, and the currency markets as well. Been creating very comprehensive hedging and forecasting tools for those markets. We've been around since 2007, and we were created for the purpose of bringing to the marketplace the ability to create highly sophisticated, quantitative, mathematical strategies to offset risk in the pricing of markets. It's pretty obvious that since 2008, 2009, that we have been living in a time of exceeding volatility. And if you're a manufacturer who utilizes any of soybeans or cottonseed or fertilizer or gold or silver, anything that you're using in terms of raw materials, then your business must be vulnerable to and sensitive to the changes in the pricing of all these markets. And since they are so exceedingly volatile, it is very necessary to have a methodology to offset risk. And Blue Apple Risk Management has been around now to do exactly that, and we expect, based upon rather sophisticated forecasting tools that we've created, we expect that in the future the markets are not going to get any less volatile. As a matter of fact, there's a good chance that commodities pricing is going to be more volatile than it's ever been in history. And it might be tolerable for a year or two, but the next time there's a 2008 where everything falls apart, or something even possibly more difficult than that, every business is vulnerable. Every business, no matter what they're doing, unless they short those markets, are going to be extremely vulnerable. Now, what we have going for us are two types of strategies. One we call a forecasting capacity, and the other are a sophisticated hedging tool called dynamic hedging. The forecasting is a unique proprietary blend of remarkably sophisticated mathematical time series approach that actually has the ability to draw a picture, in many cases, of the trends going forward in a market before it actually happens. We have, for example, in the cottonseed market, which is an difficult to hedge market because there are no futures, we have a model that has been 91% accurate in forecasting the intermediate term up and down moves since 1991. In fertilizer, we have a forecasting tool that is about 85% accurate for UAN and 80% accurate for urea, about 78% accurate for DAP. It's been, for markets that are currently traded, publicly traded, we have a Dow Jones model back to 1885, which is over 70% accurate. We have the ability to forecast going forward in almost any market between 60 and 70% accurate on the short term and 70 to 90% accurate on the intermediate term scale. Now, our clients who have been utilizing these products mostly are large firms. We've been our expertise has been dominated by the chemical industry and the agricultural industry in the last few years because of the volatility there. But we have found that the clients have benefited tremendously for two different reasons. Number one, they feel more secure that when they put a position on, they can get in a stronger position, they can get a larger position and have more confidence that they're not going to get hurt. And the second thing that helps them is that the hedging capacity that we have is unique. We are oftentimes able to locate a market to hedge cottonseed or fertilizer or some other unhedgeable that they wouldn't have been able to find without our mathematics. So the good news is that our clients are consistently in a position, number one, they're saving money insofar as losing less when they lose, and they're making significantly bigger profits on the upside. Our model for cottonseed, for example, is averaging about $20 a ton profit over 19 years, whereas most of the traders that I talk to are making $2 or $3 a ton, and that's 10 times improvement. Now, it may not be that the client is going to necessarily do exactly what we say. That's your job, it's your business. But we have basically the ability to upgrade, for the most part, most of what is going on in the industry in terms of traditional approaches to the market. What we have is unique, it's proprietary, it's unavailable elsewhere. We've spent 30 years developing these tools. We brought them to market in 2007 for the purpose of doing exactly what is needed, which is to offer very sophisticated and very expensive tools to medium and smaller size companies. The only companies right now that have access to the types of tools that we have created them themselves, and they have spent hundreds of millions of dollars creating these tools. It is not a luxury item anymore to have sophisticated mathematical tools to add to the fundamental information that you have. It's no longer something you can avoid, you can live without. These are now a requirement for daily life. The markets are so technical, they're so driven by international forces, by things that you can't foresee. You may understand the fundamentals that are happening in our country, but what happens in China, in Indonesia, in Australia, the Russian government may choose to do something. How can you forecast these types of extraneous events? The data in the mathematical perception is oftentimes leading and lets you know beforehand, and we can anticipate more accurately than most people's intuition. Even very good fundamental analysts are having to rely upon backup to support their longer-term viewpoint, because even though the fundamentals may be driving the market, the timing of these things isn't always accurate. The underpinnings of the market should be going up, 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 and it's going down, 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 and there's no real good reason for it. And you think, well, okay, eventually it'll turn. It takes 2 years to turn, and you've been losing money for 2 years, even though the fundamentals are wrong. The market shouldn't be doing what it's doing. So we have two types of products available. One is the forecasting, and the other is what we call dynamic hedging. Dynamic hedging is a specific approach to hedging which allows us to locate a particular market to offset risk in the ambient market that you're looking at. So if you're trying to hedge off fertilizer, UAN or something, you may use crude oil as a standard way of doing it, but crude oil, many, many years, if you look back, crude oil doesn't do the same thing that UAN does. It does the opposite. Okay? 80% of the time it's the same, but what about the 20% of the time when it's wrong? Our tools allow us to avoid those pitfalls in the road where you're going to get into crude oil just at the wrong time, and we'll find the right market that is likely to go and protect you rather than the one that isn't. This is the benefit that we bring. This is why the sophistication is necessary, and this is why we invite you to allow us to take a look at your company and to give you some of the available tools that we have. We come in, we do a needs assessment, we get a handle on what you're up to, we interview you, you let us know what your company is up to, what you need, how large your trading is, what your investment is in terms of insurance, and what your risk capacity is, and we'll put together a very, very specific program for you that I believe you'll be very pleased with, and will allow you to eliminate a lot of the nervousness and tension that's created, because the next time a 2008 or a 1987 comes along, your company wants to live through these things. All right, our website is called blueapplerisk.com, and of course we manage risk, we offset risk, and that's what we do, and we do it very well. We're happy with our product. We're very pleased with the feedback we've been getting from our clients. Many of them are just extremely blown away by the improved confidence that they have with their decisions, and they make the decisions, but we're at their back. We're the back office. We allow them to do things that they can't necessarily do without spending a tremendous amount of energy and time and hiring a bunch of people. Instead, they hire us. I thank you for your time, blueapplerisk.com, and looking forward to speaking with you soon. Welcome. My name is Alan Reminick. I'm the founder of a company called Blue Apple Trends, And we specialize in software and forecasting tools that allow us to forecast market trends. We've been in business since 2007, and we've accurately been able to forecast the trends of the markets over the last few years. We started the company for the purpose of educating and informing the public about the trends that were likely to be starting around 2007 that will continue for, we thought, to be 10 to 15 years in the future. And we predicted the decline in the 2007-2008 market, in the equities and in the commodities markets. And then in late 2008, we gave some seminars trying to educate the public again about the opportunity to stay in the stock market for those who had been, who had lost money. And we expected it would rally for a couple of years and that it would go higher than anyone would have expected it to from that point. And it's, of course, doubled since then. This is the third time that we're going to be making a public webinar. It'll be an opportunity for you from your home to attend in a comfortable environment or your office and hear what is likely to be the future for the next 2 to 3 years in the various global marketplace. We'll be covering the full gamut of markets, from the silver and gold market, which have become extremely popular of late, the equities markets, the interest rates, the currency markets, the commodity grain markets, the crude oil, natural gas, and energy markets. And we won't just be making forecasts, we'll actually be teaching some techniques that we've developed over the years, over 30 years of research, that are extremely powerful, that allow you to forecast some of these things on your own going forward. And we'll be offering additional educational tools for those who are interested. 2010, we gave 7 webinars in the Chicago Board of Options Exchange in Chicago. They were very well received, and I think most of you who are getting this email have at one point or another come across the reminick forecasting technique, which is archived in their website at this point. You can review it if you'd like. I'd like to invite every one of you personally to attend this May 26th full-day event in which we will review some of the techniques and tools that we use to forecast, and then review one by one the various markets going forward over what is likely to be their future for the next 2 to 3 years. It's extremely timely. We very rarely have these types of events, and we do it to educate, but also to protect the investors and allow them to come up on the right side of the markets when oftentimes they would be losing otherwise. This is going to be extremely interesting for those students of the market who would like to learn something a little different, that's very simple to employ yourself, and it'll be interesting for everyone who has any money in the market who's interested in investments. Thank you for your time, and we'd love to have you there.